Welcome to Without Boundaries, a podcast from Russell Investments. We're here to talk with the people behind the portfolios, the active managers from all asset classes who shape how markets move in the real world, and who help us improve financial security for investors around the globe. I'm your host, John Eggins, Head of Portfolio Management here and a Russell Investments lifer of 23 years. We know that the best ideas don't just come from a single source. That's why we look far and wide, spanning markets and asset classes around the globe to find the most compelling managers and insights. My guest today is Kate El-Hillow, who's the president and CIO here at Russell Investments. This one's actually personal for me because, well, first, she's my boss, but second, she's someone that I really admire, both as an investor, but also for how she builds the team, how she spots talent, and that's really what's shaped how I lead and how we work together to deliver investment outcomes for our clients. We get into her views on public and private markets and how they're integrating. We'll talk about AI, and we'll also talk about the importance of challenging assumptions, as well as some reflections on how we manage the portfolios through that really volatile period in April with the Liberation Day tariff announcements. It's also a chance really for all of you to see what I get to see every day, just how sharp, how thoughtful, but also how human Kate really is. So I really hope you enjoy this one. Welcome to Without Boundaries. Today, we're talking with Kate El-Hillow, who's our president and CIO. And we got a lot to cover. We're going to talk through Kate's journey to Russell Investments, talk through your approach to leadership, private markets, converging with public markets, a little bit of market update. And I'm going to try to have a little bit of fun because not very often you get to interview your own boss. And so thank you, Kate, for joining us.
It's great to be here.
Yeah, thanks so much. And so what I wanted to do was start with, we're here in New York City. Our first episode was actually in my hometown in Sydney with one of our money managers there. And you also have a sort of a personal Australian connection, right? So,
I do. I feel like there's Aussies everywhere in my life. Yes, my husband's from Bundaberg, which is a small town that I think nobody have ever heard of. But apparently it's a big backpacking stopover in Australia when you need to make a little bit more money to keep your trip going. People go to Bundaberg to do a bit of farming. Yeah. But yes, I've been there a bunch. Amazing part of the world.
Yeah. Well, he had the same life journey as me, married an American, and now he's here, I guess.
Yeah. Stuck or here.
Nice. Do you have any Vegemite or Tim Tams in the fridge?
Always.
Yeah?
Yes. And if every once in a while I throw in a Marmite, I get.
Oh, big trouble. Yeah. That's not the same. Funnily enough, we don't. I tried to get my kids to eat Vegemite and I failed.
Yeah, Dylan definitely doesn't eat Vegemite.
Yeah, you have to start young and persevere.
Yeah.
I wanted to go a little bit back to the beginning of your career, if that's okay. Was there anything early in your career that sort of set you on the path of how you landed where you are today?
Yeah, well, first I'd say I wanted to be an interior architect, and my dad kind of counseled me, into something more practical, and so I did business and accounting, and was lucky in kind of the early part of my career. I had the benefit of working a little bit more on risk and on the sell side, but in London, Tokyo, and New York, and so that got me really, I think, engaged and excited about the markets and in finance. I was in Japan during the Asian credit crisis. What a time to learn about the markets and some of the challenges that you can endeavor. But that first bit was amazing because you're close to the markets. You kind of see how the capital markets are driving the economy. But it was very transactional and a little bit shorter term focus. And so it wasn't until I moved over to the asset management side of the industry that I really figured out that I wanted to do this for a career. And I was lucky in that by the time 5, 6, 7 years in, I made my way over into asset management. It's where I ended up staying for the rest of my career. I like the long-term focus, really work on solutions with clients, developing portfolio strategy, and so it's what kind of set me on this path.
Yeah, and you're in London during the 2008 crisis, right?
I was.
Yeah.
I feel like there was an element of I went to Japan during the Asian credit crisis. I ended up in London during the GFC.
Yeah.
I don't know if the crises followed me or if it was just happenstance, but every time I kind of lived kind of outside of New York, it seemed like it was always during a pretty dynamic time in the market. And so, juxtaposition of you're turning your life upside down, the market's turned upside down. And I just learned so much about myself and the markets during those stints away.
Yeah, I think you once told me that you were in the right place at the wrong time.
Yeah.
And so, in some ways, in a way that turned out well.
Yeah.
And so, that might be a good link to how did you land at Russell? Why was that the right place at the right time?
Yeah. You're right. Right place at the right time. Yeah. And my whole career, pretty much for the past 20 plus years, I have focused on multi-asset and solutions. And the great thing about Russell is that's the core of the business. So I love where I was before Russell, but what Russell does was actually what I had been doing for most of my career. And so the idea of being at a firm that was so focused on solutions and solving client problems and doing it through open architecture, where you have so much flexibility as a CIO to be able to really go out to clients and say, I can structure pretty much anything that you need me to do to help solve this problem and do it in a really objective way. And so you add that with all of the implementation capabilities that we have with Russell, as well. It was almost like a culmination of what I'd been trying to build for most of my career now, in a shop that was dedicated to it.
Yeah. Oh, no, that makes sense. And I think we talked about the Asian credit crisis, the global financial crisis. It's funny. I moved to the US 2 days after Lehman collapsed as well. So I felt that resonates with me being away from home, trying to get a green card when you should really be focused on work. But this year has also been tumultuous. And so I was wondering if it would be okay to share a little bit about how do you think about leading the team through periods like early April, where we had all that tariff noise? What do we do as a team taking advantage of both the open architecture, but also the implementation capabilities?
Yeah. And maybe I'll flip back. Like when I first joined Russell, like you get to know your team, in the best way you can in the market environment you have. But it's not until you see a real market event and how people react to it that you really figure out what you have to work with. And so flash forward to, the start of this year, people were excited about, where the market could go pro-growth. It seemed like there might be some positive, tailwinds. And then we started to, hit some rocky roads. And so April and some of the tariff reaction that the market had, being able to react quickly, to that and really think through, it's sometimes hard to step into these moments where you don't know kind of the next possible, market move, but being able to react, quickly, at least to get portfolios rebalanced, back, towards their strategic positioning, and think about the credit markets that, being really tight in spreads and also blowing out a little bit, nothing crazy. Being able to lean into that, really just mobilizing the team to kind of do that across the globe, across all the portfolios was, kind of our initial reaction. But the other thing you have to balance is like all of the noise and the volatility that we're seeing, in the markets, in any given day, with, what is the medium and longer term expectations that we have. And so you're in this period where we're kind of mid to late cycle. And it's a little bit different, than maybe prior cycles in that we now have to think about inflation structurally in a way that maybe we haven't, in prior periods. The stock bond correlation also hasn't been behaving in the way that we've gotten used to, over decades. And then maybe even a bit of a desynchronization in, different markets across the globe. It's really having us step back and say, like, how do I position the portfolio kind of going into this mid to late cycle, period, and things that would be the normal playbook, might not be, as effective. And so it's been really fun. Again, this goes back to the open architecture and our ability to have a lot of flexibility in terms of how we express views and implement, that we can say, like, if long bonds might not be, the best place to be right now for fiscal reasons, for, the various, reasons around potential inflation, what are some other types of, strategies or asset classes that I can, put into the portfolio to maybe give me some of that ballast. And so strategies that, in normal times might be a small role or a small player within the portfolio, thinking about if you need to lean into maybe floating rate debt or inflation sensitive fixed income. Certainly, thinking through other volatility strategies that might be useful to have in the portfolio. So while we're reacting to the market pricing, the tariffs and that big drawdown, and then we saw the big rally that happened, close in record time, you also have to think about, okay, but what else, is going to happen as a result of some of these policy shifts? And how might I, need to adjust the portfolio? Yeah,
I think as you were talking there, it reminded me that one of the things you have, I guess I'll politely say encouraged, maybe forced, the investment team to think about since you joined, is to look at the total portfolio. So you mentioned being open architecture being an advantage. You've talked a lot about how public and private markets are converging more. And you just talked about how there are different pieces of the portfolio that you might want to add in. So I was wondering if you talk about why is that such a big theme, or what's so important to you? Total solutions and public-private convergence.
Yeah, well, I'd say first, it's based on, research that we've done, and as we look out into the market, most investors are underallocated due to private markets. And you add on top of that the market's just gotten deeper, over the last decade in terms of the types of private strategies you can allocate to. And because of technology and just, evolution of the industry, we're starting to get more transparency, different types of packaging that allows it to be a little bit easier to access these types of strategies. So when we think about developing total solutions for clients, we want to have the broadest set of strategies to allocate to, and then think through whether it's kind of growth focus, income focus, capital preservation, which are the best strategies to be allocating to, and to have a fake line in the sand in terms of alternatives versus public markets, it's kind of arbitrary. And so to really think about why am I allocating to these strategies? How do I achieve that ultimate outcome that the client's trying to reach? Like, where do alternatives play a role? And in most cases, they're not playing a big enough role within portfolios. And so as we think about that convergence, it's not just looking at risk and return trade-offs and liquidity. It's really kind of going into the actual strategies that we're allocating to, and like what types of companies are we getting access to? Like, if you want to play an AI trend, do you want to buy the hyperscalers, or do you want to go to that VC manager that might be finding some company that's going to find the software application that's going to be able to unlock AI for all of healthcare? And really thinking through, like, where is the best way to access a certain type of characteristic or a certain type of theme, and that could be in the public or private markets, and to start to look at those in a more integrated way, again, with the ultimate goal of developing that total solution for a client. We just think is more effective, and it's more realistic to do as we see that market get deeper, and we also see more convergence between public and private markets developing.
Yeah, so for investors, thinking about it in a fully integrated way, rather than just this is my alts bucket and this is my public market bucket, a lot of the industry thinks like that still. So this feels like a really important way for investors to look at their total portfolio.
Yeah, and thankfully that's how we're set up more often than not, and that we have the benefit of the full ecosystem that we can allocate to. And so us coming up with the trade-off between one strategy versus the other, we're just very objective about it. Yeah, what makes sense relative to the client allocation, and alternatives have allow you to pull a lot of different levers within the portfolio that if you didn't allocate to them, you just be constrained. So you need to have portfolio managers thinking about that now. I don't want to wait until that gets developed. I want the portfolio managers now to be thinking about those trade-offs, and as the market develops, start to dip their toe into some of the asset classes that previously maybe they were limiting exposure to for reasons like liquidity.
Right. I think you mentioned a little bit there about having investors at least be aware of both. One thing I wanted to lead into now is how you think about managing and leading the team of investors. I know we've had examples of you've actually taken people from the public side to the private side as one example.
Yeah.
So you've sort of inherited a team, but now you've sort of built and grown a team. There's a lot of people in new roles. And so maybe you could talk about, how do you think about, now put your CIO hat on, running and leading and growing your team?
Yeah, I would say probably the most important thing that I think I do every day is getting the right team in place, identifying the talent, motivating them, and kind of getting them into the right seats. And I think probably one of the reasons I focus on it so much is because it excites me. Like, I love to see talented investors continuing to grow themselves and challenge themselves, and sometimes to do that they need to move into a different seat or maybe take a slightly different perspective. Now you have this conundrum where consistency and continuity is important from an investment process perspective, but at the same time you always want to be challenging yourself and then making sure that you're growing as an investor. And so really thinking through, as I look across the team, about people that we could move from maybe private, public credit over to private credit side, or take somebody that might be very narrowly focused. We have a good example of somebody that was focused very narrowly on Canadian equity, and now is helping us develop some of our multi-asset portfolio solutions, and really starting to push people into seats that maybe they hadn't envisioned for themselves, but kind of coach them and kind of get them there, and really starting to see the team develop in a way that both aligns with where the market and clients are going, but also probably where they might want their career to go at some stage. But talent management and really thinking through how to both optimize it, but then also really keep people motivated is probably one of my most important jobs.
Yeah, I can tell. I think not long after we started working together, we had an intern who was thinking of changing companies, and you were calling her on the weekend. And so that just seemed rare for a CIO to care about the talent profile all the way up and down the organization. The other one that I wanted to learn a little bit more from your perspective is our head of research. And maybe you could talk a little bit about her and how that is a big new opportunity for her, but also driving what is now a sort of the next generation of technology and how we do manager research and quant research.
Yeah, I think that's such a big piece of it. So Evgenia it was running our R&D, our research and development team. All of our quant research was happening, and it's amazing at managing team and people. But we saw the need for us to maybe reimagine how we were doing work, and we're going to talk probably a lot about technology and AI and some of the benefits of it. Like, she repeatedly was the person that I was going to, or she was coming to the investment leadership team to talk about different things that we could be considering in terms of how we're thinking about identifying opportunities or being more efficient, even just in how we're managing the portfolios, and in her case, developing the research. And it's one of those things where I think from the outside, people probably were surprised when I elevated her to head of research globally, not because they didn't think she was amazing and actually loved working with her. That was all true, but it was just a lot of more fundamentally driven and processes around manager research that we've done for decades. I would say in a certain way, obviously always evolving it. Like, she was starting to ask questions about and starting to think about, are there different ways for us to use this immense amount of data that we have, and the way that we actually think about analyzing it. The human is always going to be part of that, and the judgment that our senior research analysts have developed over years. But is there a way for us to make them smarter and getting integrated in so much of what we do? It's transforming our team faster than I could have imagined when I came in 4 years ago. And I think it's a combination of both. It's getting somebody new into a seat that had a different perspective, but knew enough about how we actually manage money. And I really think it's going to start to transform like the next decades to come of how we think about selecting strategies.
Yeah, no, I love that example because AI is a sort of a buzzword everyone's talking about, but is that the primary area where you're seeing benefit to the investment process and the investment team? Are there other ways that we're trying to use that to sort of benefit our clients?
Yeah, well, I'd say the thing I've learned, so there was a lot of hype around it for sure, and I think everyone had like their little sandboxes that they were operating to test out different types of projects. I think what I've learned the most about the way that we've been trying to integrate it into our process is pick an area where you've got domain expertise and preferably a lot of data, right, to start with. So it's something you know a lot about. And, so it's easier to
like a manager research database.
So the manager research database, exactly right. And, if you add that with picking people throughout the organization that are also quite interested and passionate about it, and then people that are willing to change and wanting to change, like when we get those two things together within the organization, that's where we're really starting to see some evolution and, I guess, rethinking, of how we maybe make decisions or kind of get things done. But I do think, while AI and machine learning, different things, but they're both helpful in different ways depending on the problem you're trying to solve, is the tool to do it. It really is getting the culture and the right people kind of actually trying to address some of these opportunities. That is the thing that's making the difference. And I think initially it's going to be much more efficiency focused, and we're probably in that state right now. Like, I'll give you an example. We've talked about this before in terms of what we did during that April time period during kind of the tariff spike. We used the Gen AI tools that we had to basically consolidate and synthesize all of the different information we were getting for all the managers that we work with across the globe to get an idea of kind of how they were reacting to it. How was it changing maybe their views near term and long term? And we were able to do that in like 24 hours. Honestly, we were able to do it in a couple hours. But just to give Evgenia a little bit of time, next time someone asks her to do it, I'm going to say it took a day.
And synthesizing that across the group, that was super powerful. I agree.
Yeah,
it was good for decision making and for how we talk to clients.
Yeah, and then you add to that what they were saying versus what they were doing in the portfolios. Because often, we all feel inclined, forced to make sure we're kind of giving our clients perspective on how we're interpreting the market action. But when does the conviction level get high enough they're actually changing it in the portfolios, and being able to take what people are saying and what they're doing and try to match them up is also good information.
Yes.
Like, did they feel strongly enough about what they were saying that they actually were changing the portfolio positioning? Not a ton.
Especially in the equity portfolios. Not at all. Or not that much, which was partly why we were able to rebalance portfolios, I think, but we weren't saying, hey, this is a table-thumping risk-on opportunity as well. Is there anything that's really stuck with you throughout your career, something that's sort of memorable in either a good or a bad way that maybe the audience doesn't know about yet?
Yeah. Well, I'd say it's hard not to go through the GFC without having that be something that really changes maybe you as an investor, or you maybe even as a person. I mean, being in finance during that time where we were at the epicenter of the issue, we were getting a lot of criticism, from an industry-wide perspective. We had client portfolios that were really in different forms of stress that we needed to be kind of thinking through, like, do we do something? Like, how do I adjust for this? And the thing that I picked up the most, and I think this comes through like now in my seat at Russell, is it's in those moments of stress and quick markets and volatility, that again, you learn like the team that you're working with. You also learn kind of like how you handle and react to the situations. And so what I would say, like my husband has said this before, that I wish I could be more like you and not care. I think what he means when he says that, I think what he means when he says that is that you let things kind of, you roll with it.
Yeah.
And you kind of think through like, all right, how do I figure this out? How do I solve the problem? I don't like get like stressed out and like all anxiety driven. I'm like, hey, let's figure out how we're going to do this. And so I think it's in moments like that. And I was probably like, 10, 12 years into my career that helped me, like seeing people around me. I was working at Goldman at the time, and everybody coming together to try to address like this, massive market issue that we were going through, really seeing how you reacted to it, how others reacted to it. It really has changed, I think, how I operate. And I feel like now markets are just getting more and more volatile, more and more, everyone has to kind of balance between being reactive, but also being patient and thoughtful. Yes. And I feel like that's something that from that period, I was able to take that and learn from it and grow from there.
Oh no, that's a lovely lesson for everyone.
And I do care.
And you do,
I do care.
Care but not overreacting. It's maybe a good way of saying it. Okay, well, hey, thanks so much, Kate. This has been fun. Hope you don't take it out on me later. So before we wrap up, we want to play a little bit of a rapid fire game where I'm just going to ask you a bunch of questions. It's almost investment focused because it's risk management. I want you to either share that you would play it safe or take a chance. So we'll start with an easy one we already discussed. Should you say yes to an overseas assignment?
Take the risk all day long.
Got it. Going to a Broadway show with no reviews?
Take the risk.
Okay. Running with the bulls in Pamplona?
Take the risk. There's a theme going on here.
I'm
pushing 50 now, and so I probably should be thoughtful about what I can handle or not, but definitely take the risk.
Okay. I'm not sure I would on that one. Would you catch a foul ball at a baseball game without a glove?
Play it safe. Yeah. My capabilities, in terms of both throwing and catching are not awesome.
I'm taking a risk on that one personally. Sub question, Mets or Yankees?
Red Sox.
Oh.
All day long.
Great answer. And finally, take a red eye or a leisurely flight the following day?
Take the red eye. Take the risk. It's more efficient.
That's Kate. I do enjoy being in Seattle and our headquarters and seeing you chair the ISC, our investment strategy committee meeting the following day. I think you're in New York. And then later on you'll tell me you went to your kids' school performance in between. So I guess it's the red eye for the win.
There you go. Yeah, red eye for the win. There's time to sleep later. Yeah.
Thanks, Kate. Okay. Really appreciate it.
Thanks so much, John.
Well, mate, that's our show for today. Remember, in your personal life and your investing life, keep breaking boundaries.
This podcast is intended for informational purposes only. The content provided within the podcast should not be construed as investment advice, research, or a recommendation, solicitation, or offer for any specific Russell investment or other product, strategy, security, or service. The information does not take into account the investment objectives or circumstances of any particular investor and may not be appropriate for all investors. All investments carry a level of risk and do not typically grow at an even rate of return and could experience negative growth. Any past performance results should not be seen as a guide to future returns. All opinions presented are as of the date of the recording and subject to change without notice. Information contained within the podcast is obtained from sources believed to be reliable but not guaranteed. Reliance upon the information provided in the podcast is at the sole discretion of the listener. The general information contained in this publication should not be acted upon without obtaining investment advice from a licensed professional. This podcast may involve discussions with non-Russell Investments personnel. The views and opinions expressed by non-affiliated personnel in this podcast are those of the speakers and do not reflect the policy or position of Russell Investments or its affiliates. This content should not be construed as a recommendation or endorsements of any third-party manager featured on the podcast. Some of the portfolio managers or firms featured in this podcast may manage funds or accounts that are offered by Russell Investments, and they may have business relationships with Russell Investments or its affiliates. Neither Russell Investments nor any of its staff accepts any responsibility for or liability with respect to the information or opinions contained in this publication. In EMEA, this content is suitable for professional clients only. Capital at risk. Copyright 1995 to 2025 Russell Investments Group LLC, all rights reserved.